Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. Welcome to The Lumber Word. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. We bring you should not be considered as financial or investment and market trends. We encourage our listeners to make their own financial decisions in the supply chain, taking into account their unique circumstances. Join us for informative and entertaining goals, discussions and to seek professional financial advice about all things lumber.
All right, everybody, welcome to the new episode of The Lumber Word. We've got a great guest this week. First of all, introduce Matt Beamer again from Hampton Lumber Sales. Matt, great to have you back. Gregg Riley, Sitka USA, and our guest this week, you've probably heard him on some of our other shows before, Russ Taylor. Russ is kind of an icon in the industry. Russ Taylor Global is his business. You can find that at russtaylorglobal.com. Is that correct, Russ?
That's correct. And yeah, thanks for the invitation, you guys.
You bet. What we want to do is today, since we went through a holiday last week, talk a little bit about the Case Shiller new home sales. And then we're going to jump into talking about Russ's trip around the world and talk about Euro. And Russ sent us some more information over this morning that it's going to be great to talk about on the cost of lumber. That's something everybody's chasing, trying to figure out what that is all the time. So this week was a little bit different coming back from the holidays, I would say. Gregg and Matt, we'll just follow up a little bit. I mean, shipments seem to be decent. The board is keeping a pretty good premium to the cash market, but maybe a little bit of a lull this week. But we've kind of got hit by bad weather across the Midwest here, and I don't think that's anything surprising. Still selling a lot of lumber.
Yeah,
what's your thought on that, Matt?
I had a really surprisingly busy week last week for a short week and a holiday week. I'm not as busy this week, but I kind of expected that. You get your post-holiday kind of hangover. And that really, if you look historically, that period of time between Thanksgiving and New Year's is pretty choppy. The most interesting thing that usually occurs over the next 5 weeks is end of year inventory taxes in some states, end of year inventory liquidation or corrections in terms of like if you're a trader and you've got some old inventory and your boss is saying, hey, you need to get rid of these, 5 trucks of 2x9s that you've had since May of 2022. You know what I mean? You'll get some of that kind of stuff going on over the next 5 weeks. I mean, I'm not immune from that. I resemble that. We all do. If you manage inventory, you're going to have some beaks and feathers that you need to deal with. And then typically in a normal year, you get weather and you're going to get some mill curtailments of various length, and not related to weather this year. I think you'll see, like, we just lost about a half a week of production here last week for the holiday. And word on the street is from people that are in the know here over in the West Coast, the West Coast mills are going to be losing about a week and a half's production here at the end of this month. So you're talking like over the 5-week period, you're going to lose 2 weeks of production. And if you're a West Coast sawmill and you're following that trend, you only have 3 weeks worth of production to sell between Thanksgiving and New Year's, which makes your job a little bit easier. And we come back from the new year, everybody's ready to go, and who knows what the weather's going to have, what kind of impact it'll have on production. But usually there's something, right? If you're going to get winter storms and weird things, ice storms and stuff like that, that happens in December and January in the Northwest and in British Columbia. So
we got snow. We got snow on the ground here in Chicago.
Yeah, and
it snowed on Sunday.
How long has it been since you guys actually saw snow on the ground? April? Yeah,
last April, May. I mean, March, April. This is too soon. Just to ask real quick, just on that, the home sales numbers came out while they were down month to month. They're up 17% year over year. The number that caught some people's attention was the months of inventory, which is up to 7.8. If that inventory pushes, 9 to 10 months worth, that's going to be interesting. But the other thing was that the prices were down. And then we got Case Shiller yesterday or the day before, yesterday, showing a year over year price increase, 3.6%, driven heavily by the lack of inventory of existing homes. So, I look at all of that, and what does it tell me? The current status quo is not changing anytime soon. People that are in, 2.75%, 3% mortgages, they're not going to move unless it's something major happening. But on the margin, they're not going to move. So that inventory of existing homes is going to stay the same, and the prices of existing homes are going to stay elevated, not under pressure.
Well, Gregg, you said on LinkedIn, you said the spread between new and existing home prices continues to narrow. I'm quoting you here. Will new home prices become less expensive than existing home prices?
That's going to be, in some markets, I think you could see that. You may be seeing it already, but you'll see that, the builders still have the opportunity, with whether it's through interest rate buy down and other price, to keep that inventory moving. And they're incentivized to continue to do that. They're in the job of building and selling homes, so they're going to make that happen. And we know that the underlying demographics are very, very positive. We've got an affordability issue driven by price and interest rates. Prices are correcting. What's the wild card for 2024? Somewhere in the second, third quarter, you do get a significant reduction in interest rates, and boom, sales go through the roof.
But it's a great point. I mean, it is an election year, and as we sit here today, everybody's already talking about the quote unquote whisper of the Fed making a cut early in the year. And
that's not going to happen.
I'm just saying that's out there right now. Okay, but let's.
We also have an administration telling people, you should reduce your prices, stop price gouging people. I mean, the insanity of our economic policy are beyond
basically
the
Gregg.
pale.
It boils down to you have the White House wanting to pump money into the economy, and you have the Fed trying to slow it down. They're basically battling each other right now. So,
is this the part that Dave's going to edit out when my rant?
That's not really a rant. You're telling the whole story, which is that our own government is fighting amongst themselves as to what our fiscal policy is going to really be.
Gregg, what is this truth that you speak of?
One thing I do want to go back to is talk about repair and remodel, which you actually asked if repair and remodel will increase as more existing homeowners stay put. Another interesting stat that came out yesterday was the work from home. They track how many people are going back to offices, and that has seemed to stall, where there's not a lot more people going back to the offices right now. So when I look at the big boxes, anticipating one saying maybe a little bit better next year and one saying maybe not as good next year, could that be a wild card where all of a sudden, like you said, people stay put and repair and remodel
last year? I think
we
felt like after 2 years of, so about, if you just rewind the clock a year from today, if we had this conversation a year ago, all of us expected a return to normalcy. That was sort of the theme of 2022 going into 2023. We weren't going to see the gigantic, $1,100 moves to the upside, that we'd be more range bound and things would calm down. Well, guess what? That's exactly what has happened in 2023. So kudos to all of us for reading the tea leaves correctly. I think next year's a little murkier, right? The Home Depot, Lowe's, the retail trade, their forecast is flat. The home builders' forecasts are flat. The wild card is production. Nothing's really going to be it doesn't feel to me like the market is going to be dragged by demand. It's going to be pushed by production. And so whether we go into 2024 with more production on the schedule or less production on the schedule is really going to have the biggest influence on actual prices as we go through the year.
What a great segue to bring Russ in, Ash.
Yeah, and it was I have to have my little
keep that up.
Jamie Dimon did come out yesterday, and he basically made a point that rates don't just roll over this easy, and he still sees an environment of higher rates a little bit longer than most people see them, which I kind of have to be on his. I'm kind of looking where he's looking at. That makes sense.
Like if somebody was going to make, if I was going to bet on rates, unless things dramatically crumble in the first quarter, by the time we get in the second quarter, I don't know that the Fed's going to be doing anything in front of the election. They may let that just slide, right?
There you go. And so, as you said, great segue to Russ. And Russ, I love the point you brought over about this morning, about which I never thought about till you brought it up: Southern Yellow Pine production costs, in all the production costs. But I guess we could start out by, how was your trip overseas? Where did you go to? What did you learn?
Yeah, well, I had a chance to, it got longer and longer, but, longest business trip of my career, but ended up, first of all, at a conference in Montreal on pallets, which I didn't realize it's about 10% of 10 million board foot market, totally, hardwood and softwood, massive market. And then I spent a week in Europe at the annual softwood conference, and there all the players are there. So you talk to all the sawmills, everyone's losing money in Europe. I dared ask a couple of companies, is it double digits yet? And of course, you have to be careful because they often talk about EBIT after versus cash costs.
Interest, taxes, and depreciation.
Mm-hmm. Yeah, and yeah, exactly. And
non-cash, so a lot of that's non-cash.
Exactly, and I always track EBITDA. So do they in Europe, but normally you talk about cash costs as well. But so they're all losing money, and the economies demand is crashing in like Germany in particular, and so everyone's looking for export markets. The question I keep getting is, how's the U.S. market? How's the China market? Any other markets we can go to? What about Australia? And they're all trying to get wood, moving before they have to shut down. So tough situation. But all the big countries, Germany, Austria, Estonia, and Latvia, they're having terrible log prices. And in Finland as well, having some tight log supplies. So they're all in trouble.
Russ, that being said, I'm looking at the most recent statistics, and European imports are like through the third quarter are down like a couple percentage, which 90% of that is driven by one country, Romania. So like everybody else, Sweden, Finland, Germany, Austria, they're basically kind of like flatter up in imports to U.S. year to date.
Yeah, that's right. Although it's starting to trend down a little bit as some curtailments are kicking in, but they have nowhere else to go. And I did some quick calculations looking at, and it all depends on the log price, right? Germany's got the beetlewood, and if a mill's running 100% on beetlewood, they can make money selling to the U.S. right now. I mean, a skinny margin at best. Sweden is the next biggest exporter to the U.S. Their log price is higher, but their currency's a bit weaker. But they'd be hard pressed to be making any money, according to my numbers. And then one of the worst. Well, before I leave Europe, the other thing about Europe is so who is making money in the continent or in Europe? And the region that's making actually reasonable margins right now is actually Northwest Russia, which I would have written them off a year ago. I wrote them off. They had nowhere to go with their lumber, blockaded by no exports out of the port of St. Petersburg, going to the Black Sea or all the way to China. But now there's a lot of carriers coming into St. Petersburg. There's a glut of containers, so they've got cheap freight rates, as does Scandinavia and Europe as well. $500 a container compared to 5 times that a year ago. So they're actually with a weaker ruble and log costs coming down, a little bit higher prices in China, they're doing actually margin-wise, they're probably the best. So that was a surprise. But of course, they can't impact the U.S. market, so we don't have to worry about them. But they're impacting China and some of the Middle East markets and some of the
is that because
Asian
Russ
markets as well.
They're
so
embargoed in the U.S. because of the Ukraine deal? Okay.
Correct, all the sanctions. So they can't go into Europe, they can't go into the U.S., but they can go into like Japan. It's still puzzling why Japan's allowing. I know some of the reasons, but they're allowing lumber into Japan. So that continues.
Hey, Russ, I have one question on the beetle kill / blowdown or whatever they have over in Europe that you just said, that some of these mills that are cutting some of this beetle kill and sending it over are still profitable. How long do you sense that basket is there to cut out of? How much is there? How long does that go on for? What are they primarily cutting out of that? And what's the shelf life on that?
Yeah, well, the shelf life is about a year and a bit, maybe a year and a half, but typically a year. And even the Chinese won't take it after a year and a half. So it's just has a very, very short life, unlike pine that can last, 10, 15 years. But the supply, the beetlewood peaked in 2019, 2020, and it's been sort of easing down ever since. They had a warm summer, a hot summer last year, or this year, I mean. So they think next year it could be setting up for a little bit of a steady year-over-year change, but it's down about 40% to what it was, say, 4 years ago. And this volume will trickle down over the next 3 to 5 years. It's always going to be there because just like in BC, the beetles keep going and going and going, trying to find food. But there's going to be less and less food around. So and the weather can also impact that as well. So certain pockets of Germany, a little bit in Austria and the Czech Republic, and now Poland as well. They're salvaging beetlewood, and because they have to get it gone within a year, otherwise they have no value. So it's a real push. So the beetlewood price has bounced around with the green price, and that's the difference. In about 4 to 6 months ago, the green price was up, and so was the beetle price. Now everything's slowing down, and you can get beetlewood for 50 euros a cubic meter in the forest. So that's pretty cheap wood compared to what it was 4 to 6 months ago. So it all depends on the log price. So that's why only beetlewood can really get into the U.S. market at mills there. And of course they can't get 100% beetlewood, so they have to mix in some greenwood, and that raises their costs. So it's not it's not pure and simple as to how they can actually operate. But if they dedicate their beetlewood only to U.S. production, which is what they can do over there because they sort their logs, they can probably stay with the U.S. market until the log price starts to creep back up again. But then prices are up, SPF prices are up if that's what they're competing against in the market. But if they're competing with southern yellow pine, which is down, they don't have a chance, right? So that's kind of but they're more competing with SPF, but in some cases, as you guys probably know, they are competing with southern yellow pine in some applications. It is a complicated story trying to figure out exactly.
Do you feel like
that
they're going to be bringing in, like in 2024, less than 2023 or more than 2023, in your opinion, Russ?
I think it's going to be less because, remember, the U.S. is only a small part of their overall market, and demand is plunging in Europe and their other markets. They have nowhere else to go. Middle East, North African markets are their biggest export region, and those markets are bouncing around. No real stability there. China's got cheap prices right now, as we're finding out in North America. It's just pretty cheap prices, not great. So yeah, they've got sort of nowhere else to go. So the U.S. market is an outlet for some of their wood, but it'll be less volume. There's going to be a lot of curtailments. I mean, consumption in Europe, which is their major market, 2023 versus last year, they're going to be down about 11% total consumption, and next year they're forecasting about negative 3 to 4%, and I think that's going to be a lot lower because that's some countries they didn't get forecast for. So it's going to be probably another weak market in Europe, and U.S. is going to be flat next year, pretty much, as you guys were saying earlier. So there's no real demand increase anywhere in the world, as far as I can tell. So that means that the European mills are going to looking at curtailments very soon, just because they have nowhere else to go, and they have to wait for the log cost to come down, which has been very stubborn for the landowners or the governments to lower their log prices.
Will those log prices start coming down? Are they starting to come down?
They are starting to come down, but some countries, Finland, log prices are coming down. Germany, there's a battle between private landowners wanting to, because they've made a lot of money, and if it's beetlewood, they'll get rid of it, but some of the greenwood they're trying to hang on to. So there's a bit of a battle there. So it just depends on the country and the timing. But I think we'll see, just because supply and demand have to balance, or mills curtail, we'll see some log prices coming down, but some curtailments along the way too.
So, Russ, one of the things that we continue to see in the U.S. market is healthy liquidity. Obviously, we've acknowledged that prices are down. I guess I call it bouncing on the bottom. But we continue to have healthy takeaway. What's your forecast for production next year? BC, Eastern Canada, Pacific Northwest, Southern Pine.
Yeah, well, the interesting thing is when you look at overall consumption in say North America, it's been flat for about 5 or 6 years, incredibly flat. But you look at production over that same period in North America, it's been down, and it's down this year, and it'll be down, well, maybe flat next year. So it's because there's regions like in BC, production is still going lower, although it'll probably be flat next year, depending on prices though. And the rest of Canada is relatively flat, no real growth. US West, Matt, it's pretty flat there. There's even declines in the harvest in Oregon coming up. So probably less production, slightly less production to flat. That leaves the US South. That's the only region that's been expanding, lots of new investment. I looked at, over the 2018 to 2022, 7 billion board feet of new capacity, but production increases out of the US South over that time frame, only half of that, about 3.5 billion board feet. So there's a lot of new capacity that just hasn't started up fully yet, and that's going to come on stream. So we'll get increases.
Will that
only
come on
in the
stream?
US
I mean, when we talk about, so Southern Pine costs today versus the market price, what's that finance look like?
Well, that was the surprise doing my analysis, because right now, as you know, Southern Yellow Pine prices are like what, 360 or something like that, and
very inexpensive.
And normally, yeah, normally Southern Yellow Pine trades at a 50 plus premium to SPF BC FOB mill, and right now it's trading at a $50 discount. Yeah. So therefore, they're around break even, which is why we saw that announcement by Boise Cascade probably shutting down their mill in Alabama. It sounds like it's a small mill, but nevertheless, not making any money and not going to put any capital into it. So that's, Southern Yellow Pine probably bottomed out maybe last week, and it's picking up a little bit. So, but normally they make the most money because they have the prices and they have the cost structure with the cheap logs. Kind of like Beetlewood in Germany, they've got the cheapest logs in North America, typically around 50 cubic meters, $50 a cubic meter, which is cheap, $50 a ton. That's cheap wood anywhere in the world, and that price is still in effect. There's still lots of surplus timber. So the too much production, though, maybe there's too many Canadians down there. They don't want to shut down, so they flood the market. Anyways, we'll have to see until the
so we
prices.
say Southern Pine is at or below the cost of production at the current prices, and there's a lot of excess capacity that could come on given higher prices.
Slowly, it comes on slowly though as well. But yeah, so I mean, when the Southern Yellow Pine prices move up, I mean they're down $100 in what, about 2 months.
Yeah.
So if they're back up $100, they're making a lot of money. So even if they went halfway back, they'd be the highest margin region in North America at about, if the prices went to $400, they're probably the highest margin region in North America, despite everyone else struggling. So
it's amazing how capacity can come back on in a region when people are making a decent chunk of money, and how quickly it can come back on.
Yeah, exactly. And again, the only region that's losing money is BC, and that's their losses are at a minimum, but the price is up too. So their losses are a lot skinnier than they were before. I always thought that the break-even price on 2x4 was around 425, and my numbers sort of indicate that. It again depends on log prices in BC, because some companies have their own, a lot of forest license wood that's cheaper, but a lot of the mills now have to rely on open market wood. Some, more than half of their volumes are open market wood that's more expensive, so they would be losing money.
Are you saying 425 on a 2 and better 2x4 basis, or is that a 425 on a blended 2 and better number 3?
Yeah, that's profile? Based on the price of 2x4 alone.
Irrespective of the lower grades. Okay.
Yeah, so I've done the whole mill sales average, and of course that pulls it way down. But the 425 on a break even on a 2x4 number 2, it's about 425. ranging from the low 400s way up to like some cases 475 if you're buying a lot of open market timber. So it's a big range in there. But my guess before I did my analysis is about the same as after doing my analysis, around 425.
Yeah, because
that
I
sort of
think
thing.
when I've done the discussions in Eastern Canada, on the full mill profile, it's somewhere between 450 and 500. Boston or Great Lakes. So obviously, the 2 and better price is up there. But when you look at the number 3 in the economy, that really pulls that down.
You know what, though, Greg? If you look at print and just look at, I'm not talking Eastern because I don't follow that as closely, but Western print, you got 2x4 at 408, 2x6 is 350, 2x8 is 358, 2x10 is 340. The only thing that's even close to a profit is 2x12. Well, how many 2x12 pieces are coming out of Western sawmills other than Dunkley and maybe a couple other sawmills that produce a little bit of it? Basically, the entire complex of what they're producing as a 2 and better piece of lumber is a loser right now. And then the residuals are really big losers. The only one that has real value is 2x4, number 3. It's printing 340, which is the same price as 2x10, 2 and better. So that's kind of weird correlation. It would lead me to buy 2x10, 2 and better just for people that are following the charts. But all the other 2x6, number 3, and lower grades are starting with a 2 or a 1. And all the economy starts with a 1. And then their chips are worthless, right? So sawmills are having trouble with their residuals, and that's a big part of their overall sales average that nobody ever talks about unless you work for a sawmill. That math is not going to work going into 2024 for anybody in North America.
Yeah, and you're right, Matt, because that's what I looked at too. I mean, I don't always look at the full range of sizes and grades, but I was shocked that 2x4 was the only real high priced item. Everything else, you're right, is way lower in SPF. Southern Yellow Pine, it's a little more even, but it is an indication that that's why the break even price has to be so much higher, because everything else is a loser right now, and China's not an option. Trying to get rid of volume at a reasonable price. Prices there are, they've been sliding for 18 months in China. One of the trading guys I met over there, because I went to China for 2 weeks after this, and he was complaining bitterly about the SPF business was a real loser, and he went on and on and on. And then him and his buddy drove off in his buddy's Lamborghini, right? So I don't know what that means. But, so, anyways, I don't know if it's all that bad, but
first world. That's what we call first world problems.
Yeah, exactly.
He wanted a Bentley. All he could get was a Lamborghini.
Exactly.
Do you expect to see more closures in the South now? I mean, obviously, we had this first Boise closure. I'm guessing it's a higher price mill, or maybe their fiber basket is expensive. They're sitting in there. But what would you expect out of the South going forward if we don't see some kind of relief in prices here?
Well, we have seen 2 mills close in Florida in the last year or so, like because of a tight timber supply and not wanting to put investments into the mill. You get those kind of curtailments, especially as new capacity comes on, and some regional log prices will start to pop up and squeeze, the marginal suppliers. So I think you'll see some of that. But in a weak markets, I mean, as we've seen in BC, when you're in a high cost producer in weak markets, curtailments and closures are inevitable. And so in the South, there's still a lot of low priced capacity, especially the new capacity. But some of the older mills, one shift mills, family owned, they may decide this is the time to shut her down. But I don't think we'll see much more.
If they're still family owned and they didn't sell out 2-3 years ago, shame on them.
Yeah, exactly. Absolutely.
I mean, the cash register could have been rung for a lifetime. I guess I kind of get back to a couple of kind of thoughts that always stick in my head. Is number one is that everybody can lose money for a while, especially when it's a non-cash loss. Nobody can lose money forever. Mills really shut down more significantly when they have a whole bunch of dressed inventory and they can't sell it, not when just the prices are below their, where they're losing money on a fully loaded cost basis. As I hear everything and I'm talking about, I'm going, okay, so, we're saying consumption next year, flattish, production marginally lower in North America, European imports marginally lower. So it kind of tells me, we're going to have kind of like inventory accumulation rallies and inventory depletion corrections. Matt?
We will have a very similar year to last year, minus the $180 spike in January, February that we somehow got. I don't even know how we got that. I mean, looking back on last year, it's funny. I was talking to a futures buddy of mine, and we were looking at the charts from last year at this time. Well, in October, we got up to like 620 or something like that. And then we got down to 350, 360 at one point, all within, and then we went back up to 620 again, all within like a 3 or 4 month period of time. This time last year into January, February. So I don't think we're going to see that in the next 60, 90 days. I wouldn't be surprised to see a $100 rally. We've been getting $100 rallies all year long, and then we just settle back down.
Yeah, because I mean, if I contrast this year, this time last year, the sentiment was really, really negative. People were talking about like 1.1 million housing starts because, the shock of the interest rate increase was still fresh. And like the talk of a recession in the first half of this year was really high. I contrast that to today where, I'm going to say there's modestly optimistic for the markets for 2024. Nobody's wildly positive, but they're modestly optimistic.
Yeah, I can't really disagree. I mean, we've been pleasantly surprised this year, have we not? I mean, We've had a couple of significant rallies throughout the year. Trading has been fairly orderly. There's been decent liquidity. Production and demand seem to be relatively in balance. So, I mean, hey, I've been doing this for 30 years. I can handle that type of stress level, right? When you're living through the roller coaster of 2021 and 2022, I don't think I could take 5 years of that. That's the kind of thing where I don't have much hair left. I would have negative hair. It would be growing inward after 5 years of that.
A couple of years of this though, and that might be that might be okay. Ashley, for a lot of our viewers, we've been talking about, hey, behind the paywall, we have identified a number of very, very lucrative basis trading opportunities. And, so it's a time of year, holiday season's coming. If people have some money they would like to invest in a managed risk scenario for 2024, please ring us up. We can partner on basis trades with folks, or for the right price, we can open that door for them.
Well, it's crazy you were just saying that, Greg, because after listening to Russ talking about pine and looking at the premium that the CME, the premium that the CME is carrying, right? There are some great basis trades out there. And when Matt identified some of the other non 2x4 items, there's some pretty stellar potential trades out there.
We got some 2x10 in Babine these days, Matt. You got some 2x10 in Babine?
Honestly, dude, we don't. We ran a couple weeks worth of hem fir, which we never did. We did that once this year, and we just got done with that. So I've been selling hem fir north out of Babine for the last 3 weeks, and we're going back.
That's got to be beautiful. That has to be beautiful lumber.
I'm sure it is. We're not pulling out of it. It's old fashioned fancy lumber is how I describe it.
Right.
They did that, and then we're right back into 2x4, heavy 2x4 again. So we don't really make a lot of 2x10 anyhow. I mean, that mill's really designed to run lots of 2x4. And so then, our business has been pretty good in Babine. Prices aren't really super strong. They're up a little bit, but they're not, it's not like we're going up $50, $60 at a chunk here. It's been a steadily decent and surprisingly pleasant holiday market here. So
one of my thoughts here, when I'm looking at the players in the new home sales, the big builders, maybe a little bit less repair and remodel going on. I mean, there probably isn't as much 2x10 and 2x8 going into the market right now. And that's what the price is telling you. Does that make sense, Matt? I mean,
I think this is just the slack time of year where the treaters are sort of, in that in between. That'll fix itself. The 2x8 and 2x10 markets usually correct themselves sometime in the first or second quarter, but it's not uncommon to be able to invest in in relatively undervalued 2x10, 2x8, 2x12 in, October, November, December, any year, really.
Gotcha. So Russ, what do you have going first part of the year? You have any more trips planned? How do people get a hold of you? And what is Russ Taylor doing for 2024?
Yeah, well, I thought maybe I might be slowing down, but that's not the case. I'm actually just working on a China outlook report. That's why I went to China. So that'll be out in February, and then in a week or two, I'll be announcing another conference series that I'll be starting up fall of 2024. We're going to go back doing the kind of what we used to do, kind of a global conference talking about the trade. So that's coming up. So those are the things I've got going, and all that's at www.russtaylorglobal.com, and all those sort of things are going on, and probably doing a little bit of travel. I'm not sure yet. I'll be going to a few conferences, and probably heading back to Europe in the fall.
Well, we love having you on as a guest, Russ. You always add like so much content and tremendously knowledgeable. So we really enjoy it.
Yeah, thanks, Russ.
I'm fascinated by Russ. Honestly, Russ, you occupy a spot in this industry which is really rare and valuable. So thank you.
Oh, well, we'll tell all your friends then, because it all helps. But and Greg, thanks for the nudge to review my costs, because I don't always do that, but it was interesting. I really learned a lot.
Okay. I'm here for you, brother. I'm here for you. All right, guys. Dash, you want to wrap it?
Yeah. Thank you so much for listening to this episode of The Lumber Word. Once we get this published, we want you to also go back and look at some of the previous ones we had, but also reach out to Russ if you want to really get inside information on the costs all over the globe, which will really help you become a better trader or a better builder or a better production builder. So, guys, thank you so much for the time.
What about a better person? What about a better
person? A better person, especially this time of the year. It's always good to be grateful for that. So, thank you, guys.
Awesome, guys.
We'll look forward to talking again.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.